Hello, my name is Faith. I'm a real estate agent with Keller Williams Beverly Hills. Welcome back to my Market Watch Mondays. Real estate news in brief for the week. Inflation continued to ease in July, with the Consumer Price Index, CPI, falling to 2.9% year over year, and core CPI at 3.2%, driven largely by lagging shelter costs. The Producer Price Index, PPI, also showed a modest increase of 0.1% month over month and 2.2% year over year, signaling a stable inflation outlook. Despite these positive inflation trends and approaching 6.5% average 30-year mortgage rates, which typically spur refinancing, retail sales unexpectedly surged 1.0% month over month in July, exceeding forecasts and potentially dampening the anticipated boost in home buying activity. Realtor.com's mid-year revisions showed a significant shift from earlier forecasts, predicting a 14.5% increase in housing inventory and a 4.6% rise in median home prices for 2024, contrary to initial expectations of declining prices. This aligns with broader market trends, where home prices grew in 89% of major metros in Q2 2024, with a median increase of 4.9% year over year. Notably, San Jose's median home price surpassed $2 million. Meanwhile, demographic shifts reveal that households with children have declined from 52% in 1950 to 39% today, while pet ownership has surged, with 66% of households now having a pet compared to 56% in 1988. Inflation continued to ease in July, with the Consumer Price Index, CPI, falling to 2.9% year over year, and core CPI a slowdown in home price momentum despite improved buyer activity due to lower mortgage rates. The Buyer Activity Subindex increased 3 points to 40 in August, rebounding from a previous drop, while the Price Direction Subindex declined 5 points to 45, dipping below the break-even point for the first time since December 2023. With anticipated Fed rate cuts starting September 18th and typical seasonal slowdowns, these factors are expected to influence future trends. As of early August 2024, average 30-year mortgage rates dipped to 6.34%, following weaker than expected July jobs data, but have since edged back above 6.5% as mortgage-backed securities gains reversed. Despite this, refinancing activity has surged, with refi applications jumping 50% in 2 weeks and making up about half of new loan applications. While existing home sales remain sluggish at a 4 million unit annual pace compared to the normal 5.5 million, a slight uptick in pending sales is anticipated. Fed rate cut expectations are high, with a 100% probability of a cut at the September 18th meeting, and further cuts likely by November and December. Please stay tuned for more updates.